Hi, this is Steve Hodgson, Modern Asset Management. It is June 2, 2021, and we are 13 days from the federal government saying we can go, or the state of California saying that we can go out and play again. So, and I wanted to, this is rule number one, note investors. Rule number one is Warren Buffett's statement. Rule number one is don't lose money. What's rule number two? Follow rule number one. I have not always done that. And so that's why I like to remind myself of that. I'm going to talk, my little opening is going to be tonight about passive or active. I have long not liked passive investing for the misplaced belief in my own abilities. And sometimes I'm right, sometimes I'm wrong. And but with our small dollar lending business chewing up all of my time these days, I've had to make some passive choices, and I want to go into what those were and how I did. I guess I've always done a little bit of passive investing. I've had the Vanguard account, and I got the traditional IRA at Fidelity and all those things. And I'm proud to say that I made what, a 200% profit on my Bitcoin investment. Trouble was I bought it at 300 and sold it at 1,000. I think that was 9 Bitcoins. Oh, well. Anyway, so there's some things I really don't know how to do. And typically stocks is in that category. So let me get some stuff out of the way. Let's see. So pros and cons, passive or active. Passive, set it and forget it. I'm going on Medicare next month. I'm 64, going to be 65. It's probably past time for me to be thinking about that more and more. But then how do I do that? I have to work with people who are better at whatever it is than I am. And that's even better than my ego says that I am. It allows me to take smaller positions, so I'm not making giant bets in one thing. I'm going to earn a little less because I'm not doing any of the heavy lifting. And it also gives me the choice of whether I want to be a debt investor or an equity participant. If I want to have a bigger chunk of the upside by taking more risk and giving up some supposedly guaranteed money, but a reasonable fixed return. I lend money for a living. It's what we do. I've been in the credit and collection field for more than 40 years now, and I know how to underwrite. And so we've been mostly correct. So on the active side, I say yes to everything. I just do. So it really comes down to how many projects can I manage well? And again, getting to the age where I just can't work 16 hours a day effectively 7 days a week. I have to recognize my reduced capacity and try to work on what's most important. Where can what I do, where can my special skills be used best, and really focus on that. And when I can get my special skills to line up with what I really love to do, well, then I shouldn't do anything else but those things, right? But the other part of it is it's versus taking less risk. It's all in. I mean, there's what are there, 1,400 people today that owe me money. That, like I said, that'll be full time. And we're at the cusp of tripling or quadrupling or even more so that portfolio. We understand what we're doing in our day job, so that means what was my investing day job has now become my part-time job. How do I choose where I invest? I'm playing with my retirement money, so I have to be careful. also playing with my kids' money, so I got to be extra careful. Um, and I want to make sure that I'm reasonable and that I'm a good partner, even though I'm supposed to be passive. Um, I have to go where I know. I have to go where I know. I understand real estate, and I understand and really love the mathematics of compound interest. I don't understand crypto. I don't understand mega mansions. If you've read any, well, followed any of my other stuff, there's a tale of um, a $7 million Bel Air mansion that I participated in. That is just a story. I could have done 20, 30, 50 houses in Pensacola and the effort that it took to do that. Where do I like projects? I don't want to swim upstream anymore. So I look at where big macroeconomic indicators are. Where are people migrating? They're migrating south. They're migrating. They're migrating rural. They're where I'm moving my company to Nevada to get out of California tax consequences, and I'm not alone. And I'm investing in the partner as much as I am in the deal, and I think more so. So what do I have passively now? Here's my list of stuff that fits this meeting. I'm in two apartment REITs with a well-established, decades-long turnaround company. They buy C properties, upgrade them to B, tenant them, raise the rents, and they're 10-year holds, and they sell them depending on time. I was just all hot for mobile home parks. So I invested in one about 3 years ago, and it was with a new syndicator, and it's going to be okay. But compared to the really professional REITs in Tucson and Seattle, the tax filings always late. The monthly report always has a lot of but this, but that. Where the Seattle folks are just month in month out, 1% vacancy, just beautiful. 3 months ago, I started funding land flipper deals, and I have 20 of those properties right now. Most of them have already been sold. Most of the souls have been sold on terms. So there's a markup in the wholesale to retail value, and there's a value in the real estate note paying out over the next 3 to 6 years. And like I said earlier, one of the things I like and understand is compound interest, and my day job business is buying discounted receivables. So that fits my experience. I really enjoyed being a money partner in Pensacola. I've done 10 transactions with Sunrise Acquisition Services, and Eric from that company is on the call here. And that is absolutely an example where the partner is more important than the property. We've done everything from our smallest transaction was a $15,000 sale. No, $13,000 purchase. Our largest sale was $580,000. And everything in between. And I have several deals going with Sunrise today, and more in the works as I'm actively acquiring more properties. So in Pensacola, we've done 6 ground up constructions. I have 2 rentals left in that portfolio there. I had forgotten about a house that we just fixed and flipped. That one was called Arapahoe. Nice house. And I've done 3 lower end fix and flips to seller finance where we were the bank, And then I sold those mortgages. I sold either all or a portion of those mortgages to other investors. What I've done in those primarily is I'm keeping a back end piece that kicks in 10 years. And like I said, I was 65, call me 65 now. At 75, I could probably use another couple of $1,000s a month, right? So we've done 3 straight lot financings for builders where we carried a second, in one instance a third, behind a construction loan, and those are 2 of those were great. All three of them were great. One of them we've rolled that money over once, and we'll probably roll it over again. In the last instance, we are debt investors, whereas in one of the other ones, we were an equity investor, and we shared the profit on the sale of the property. I'm back playing with tax deeds, and this is we'll see how we go. If we did this call a week from now, I'd have a tax deed story. So maybe I'll have a tax deed story to come. I've got 7 bids in for auction that come up on Monday. I'm looking for feedback from Sunrise on which ones of them are, oh yeah, go get this one no matter what, versus that one can go. Bids are between $5,000 and $75,000. There's one sitting out there thinking 130,000 that I like, because I think the upside's over 200. And I've got some bids coming up on foreclosure auctions. Foreclosures in Florida are happening again. Most states are not, but there's always been foreclosure on unoccupied and investor property. And like I said, we're back to picking my partners. If I had to throw everything away and not do anything else, I would just go do deals with Sunrise, because I said they've always come through. So that is the end of the slideshow. We are open for discussion. Maybe I can get Eric to take a minute and talk about what happens on the other side of trying to manage a passive investor, and what makes a good passive investor. I think it's me, because I hardly ever ask any questions, but that's probably not true.
Was that a joke?
Yeah, if I could just shut up, right? So yeah, but I can expand on any of that stuff, or we can I'd really like to hear is things y'all have tried, and what works and what doesn't, and what kind of things we should be opening up to look at. We do a little bit of syndication. I don't have anything working today, but as soon as I say that, something will come up. I just passed on a $2 million office building here in Marin, because I just couldn't make the numbers come even close to covering the debt.
Hey, Steve, this is Jens Peterson. How you doing? I thought I would chime in just to, break the awkward silence for a minute. I was curious, you said something about like some of the land flippers. You mentioned Oregon and Utah and a couple other places. I grew up in Utah and I now live in Oregon. So I'm kind of curious, like what areas or neighborhoods some of that might be happening in. I'm assuming maybe around Bend is possibly one of the markets that they're doing some land flipping in.
It's everything I'm doing is rural. It's all out. Some of it is 20-acre parcels on hillsides and mountains.
Yeah, non-buildable.
Right, or nominally buildable. But there's one of the small ticket ones that's been working is the flipper has been working in a area that's already been subdivided. It's already been platted, so it's in 2-acre, basically in 2-acre chunks, and he's been buying those wholesale and then selling them on terms. There's all kinds of the usual issues that come up with that kind of stuff is what's your access to power and water, what kind of road access, how do you get in and out in the winter, all those kinds of things. But it's been this. Now, why did I choose? I'm working with 3 different flippers right now as a test, and the clear winner is a highly automated, systematized guy who's got a machine. He mails 1,000 letters. He buys 10 properties. That's just how it works. He sells them for typically double what he paid for them on a 0 interest note. And we do a 50-50 split up until I'm whole. And then I take 35% of the monthly payments above that. It's we're 3 months into it. It's been working. Like I said, I've got other guys. So it's his website is it's an interesting name. It's countrymile.land, not countrymileland.com. It's countrymile.land. And then Buck's been Johnny on the spot with how that works. So his are some north of Portland, some middle state. The other 2 guys are working. One's working San Bernardino down in the desert. The other guy is working the Utah, Idaho, Seattle kind of band across that part of the country. And I funded a Utah deal and a east of Seattle deal for him. Both of those were, I think, 20-acre pieces.
Nice. Appreciate the info. Yeah, I was just looking at his website just to see if I am very far from any of those neighborhoods. Appreciate the details.
So. I made a little list of things to fill quiet time. So, whenever you sit in this chair with folks listening, there's this implied belief that I know more than you. That's not true for me or almost anybody else. I thought I'd take a minute about my kind of narrative on what's going on with housing prices. I saw that year over year, Phoenix was up 20%. Parts of the Midwest were up 20% for no reason at all. But with all this increase, I saw Pensacola, I think a solid 10, consistently a solid 10, and year over year, month, May to May comparison. I don't see any reason that this is going to go down. We purchased a property in Henderson, Nevada. So we purchased this property in Henderson, which is a suburb of Las Vegas, and it was roughly 650,000. And we bought it at a little level of distress. Hi, Bev. We bought a little level of distress, so we paid cash, which then when we try to finance, we're now a cash out refi. So the rate's a little higher. I was doing those transactions at 7% and being really happy, putting a rental together with a 7% note. We financed this last purchase at 3 3/8. 3 3/8, 75% loan to value cash out is the reason that real estate isn't going down. I don't know if the intrinsic value of that house is 600. I know at one time the value of that house was 400. I don't know if the intrinsic value of that house is going to be 1 million someday. Probably, but that someday is a long way off. But interest rates, as we've been hearing, as we know, makes things affordable. I saw a Robert Schiller interview that he says it looks like 2003 to him. And that's, I like when, experts match up with my thinking. The Fed said they're going to keep rates down here for a couple of years. So the party's on for a couple of years. That's just what it is. They're not going to make the mistakes they made in 2006. They'll make new mistakes, but it's not going to be letting the banks fail. That's for sure. So there, that's my time filler. So now we're back to the floors being open.
This is Jens again. Yeah, I'm just new here too to the group,
Thanks.
so
Jump in.
Yeah, I've been pretty much absorbing the note stuff. I mean, it had hit my radar in years past, but like it's really popped up again recently, and it's been eye-opening. I've taken, like a couple of courses. I've actually paid money for the training and everything, and so I'm really still working through that. Haven't really like gotten into my first note yet, but I'm still kind of like processing and assimilating. But I have, I do have rental, and I've done some flip stuff and all of that. So I'm just trying to figure out how to best work it into my tool belt, and so it's just another process. It's another tool to go in the tool chest. But I really like the potential that I'm seeing. So I'm just kind of excited to be here and wanted to throw it in because I know how hard it is to throw this kind of stuff together, and appreciate you taking your time.
No, thank you.
So,
So let me pontificate on notes for a little bit. I've bought 40, I think, notes in the tertiary broker marketplace. I think Paper Stack with a C, just a C, is a perfectly good spot to go shopping. You get a range of different brokers and sellers there. Dave Putz at JKP out in New Jersey usually has a list of 80 to 100 loans available at any time. Most of the stuff that comes down to available to us, the single one-off buyer, the small investor, is the stuff that's been picked over by all the big guys, medium guys, and the small hedge funds. It's their junk that gets thrown down to us, and I've got some videos talking about some of those tales. So I got back to the old school, make my own notes through seller financing, and I also buy other forms of discounted paper. Primarily medical accounts. Elective surgeries is a lot of what we do. But I'm a licensed lender in California and Florida, along with the other registrations. I need to be a note buyer in some other states. And I started funding I started funding real estate agents, basically. So I live in Marin County, which is an older community, and there's lots of people here that are house rich and cash poor. They're retirees, and they're looking to sell their house, and the house is run down, needs $50,000-$70,000 to clean it up and get it top dollar on the market. We just did one. So I work exclusively right now with the Remax agents. We just did one here where I lent $65,000 into the property to fix an air conditioning system, update the bathrooms, et cetera, et cetera. And what the agent sent, we just closed, we just got our check at the end of May. We lent out 65,000 and we got back 71 and change. So I made a 10% profit in 77 days. You know, yeah, okay, maybe I'm bragging, but the email from the agent said that house cleanup allowed the homeowner to get an additional $250,000 at the sale table. Right? So, and this was a retiree that didn't have the money to clean up the house. And two things happened. The primary thing is the home sells, the staged cleaned up home sells faster than the house that isn't. And when you're selling to a retail buyer, and the ROI to that borrower was 4-to-1. We made 4 times. He made $250 on a $70,000 investment with me. I didn't ask for payment. I didn't file a second lien. I had a letter in escrow. They had to open escrow with my preferred title company who handles these transactions for me. And Shauna knew what to do, all buttoned up. I'm just paid like a contractor bill or real estate commission or whatever. So I'm leaning more toward how do I turn money quicker? And so if I'm going to make a 15-year mortgage now, I'm going to make sure that it's got some real margin in it, that it's got my sweat equity in it, that it's that I've made the terms right. So if you're looking new, there's real estate agents that need help. There's flippers that need help, and then you've got to start thinking about how do you vet those people. If somebody needs $50,000 or $100,000 and they don't have it, well, now we gotta look at them a little closer. And again, so I go back to I don't need very many partners, but I need partners that are working hard, and Eric's that partner. So
yeah. Quick question, Steve. When you did that like private lending loan for that realtor to kind of finish the rehab to get that property ready, did you base it off of any kind of like, I just want like 10%, or like any kind of what did you use to structure how much you were going to make on that?
I know what there's a bunch of special California rules that allow me to do what I do. These are construction style loans. They're less than a year, so I don't have to go through the mortgage loan origination process. My definition of what I am is I'm a hard money lender. Right? And you can find if you want to learn if you want to learn this, I think what jumped into my head was find the local hard money guy there who will take your money in a deal like this and split the upside. Typically those folks will pay 8% on a note where they're charging 10. What makes me attractive to Remax is I'm not charging points. I'm not asking for payments while the property is on the market. And my interest rate is a nominal 8.9, which makes me better than the hard money folks at 12 and 15. But what I'm playing is the short term. Right? I'm picking properties that I know. Well, it's not hard to do in Marin. Everything is going to sell. But I pick what I know. I pick what I know, and I know that house. I know that house. I used to live around the corner. There's 200 houses that are just like it. I know what they're going to go for. And making it the prettiest house on the block was exactly the right thing. So there's realtors that need to fund transactions like that, and a realtor never thinks that way. Realtors are not investors. Maybe you can find somebody to partner with like that. The other is, do you know folks in the trade? folks in the trades. We finance, we're looking to finance things like roofs and windows and doors. There's no way that I can finance that house sold for $1.25 million. When I lived around the corner 10 years ago, my house was nicer and it was 600. So I don't think that house is, in my mind, that house is not worth over $1 million, but apparently it was. So, I said from loan to closing, 77 days. So that house was on the market for minutes. Yeah, so that's how I'm trying to take advantage of taking some of our money and turn it over like that.
Appreciate that. That's good to know. I'm hoping somebody else will chime in with a question. Looks like there's something in the chat.
Bev's here. She might have something to say. Bev knows lots of stuff.
I knew lots of stuff. I know lots of stuff I want to do and haven't done a whole lot of it. But this, I'm still very interested in notes, and did actually wind up doing seller financing on a place that we sold. So, and we're loving it. We're getting 9% or 8%, something like that. And so it isn't,
you want to sell some of that note?
No way. And the beautiful thing was I knew the property, all too well. I know every patch of poison oak on that 40 acres. And I met the people, and so, but that's what I'm thinking is I was thinking, well, I'd like to get into notes, but never have it, more than 2 people removed. It's like I want to meet the people and I want to meet the house, but I really like this short-term idea too. And I didn't realize you were so close to me. I'm in Sonoma County, one county up from you. So, and I'm a realtor, so I could probably, I've seen flyers on the table at the meetings back when we used to have realtor meetings that say, hard money loans and stuff like that. And I don't mean, how do you get in with realtors to promote this idea?
Well, I'm too much to do, so I don't go out and market. But I'm friendly with he's maybe 40 years, a Marin broker, and he used to be a tenant of mine. And he introduced me to the people that run what's the gold version of Remax, the NorCal Gold Group, which is Sacramento to San Jose, and they've got 100+ agents, and we've done a round of distribution of flyers. Their management team knows about it, and this is a specialty kind of thing. So I'm looking for I'm looking for the equity rich homeowner who's motivated to sell, and it always comes, this work always comes from has so far always come from the experienced agents, right? So a new agent's going to do a CMA, they're going to do a competitive market analysis, they're going to show you a piece of paper that says your house is 800,000 because these other houses around you are this and that. The experienced realtor is going to come in with a different vision, and they're going to look and say, this is $1.5 million if we do this and this. And the homeowner then goes, I can't do that. And that agent goes, I can.
Perfect. Huh. Well, I feel like I need to know.
Since you're a realtor, I happily do advances on commissions.
Oh, interesting.
I do it. Realtors are chronically
advances on
because you live big paycheck to big paycheck, right?
Yeah.
If that's what you do, and you've got houses under contract and you need some money right now, I only charge 10%.
I was going to say, it sounds like you're getting into the payday loan business.
I used to own a payday agency. I used to.
I was going to say, I know they make good money.
But I don't charge those rates anymore. I charge 10%. because I'm selective who I deal with.
So, do you have enough capital? Do you need an investor?
You came on a couple minutes late, and I said at the beginning, I said, I'm too busy to syndicate anymore. But the answer's got to be yes. I'm just, I happen to have a bunch of cash today, but I'm trying to spend it. And the little black box that says Eric on the screen, he's trying to spend it for me.
Perfect. By finding new loans to buy?
We're going to try to do some development. So we're going to try to do that, and there will be loans coming out of that. Typically, what I've done in Pensacola is we will buy a rundown house, fix it up, tenant it, sell it to the tenant on seller finance. So it's a more than a year transaction, so that I have a short-term capital gain, and then we convert it. Then we sell it on terms. We sell it on terms, and I usually will split a first and a second, and I'll sell the first to an investor like you, and I'll keep the second, which starts usually in 10 or 12 years.
Huh? Why keep because the first is worth more to sell, but you've
Yes,
had
yeah,
now
you
that
will-
experience to
Yeah,
trust the second?
I want you, because I always look at things like if it's me, right? Which is why I'm me. I want to make sure that you are absolutely protected if I get struck by lightning. You're going to have a 50% loan to value transaction. So you're going to be okay. The contract between you and me says that I can come buy you out at 110% of unpaid balance at any time. If you want to bail, like it goes in, if you say, I don't want to do this anymore, I'll buy it back at 90%. You say, hey, I found something better to do, or I just don't like this anymore. So there's a 10% each way swing. But if the note's in default, I want it back, because all my profit is in the back end.
Yeah.
So
Yeah.
I'll write a note that has a $50,000 first and a $20,000 second. Think about that, folks. Buying a house for $70,000, right? Have a $20,000 second that won't start for 10 years. It has 10 years.
Oh.
It has 10 years worth of interest running on it at 10%. So when that $20,000 note activates, it's $50,000.
Oh, so the interest starts accruing, but the payments don't for 10 years.
Right, because you have a shorter term first mortgage.
Oh, okay. All right. Shorter. Interesting. Huh.
Steve, quick question. Is this different than a partial, or is it the same?
A partial, a hypothecated loan is illegal in some places. It can be considered to becoming a security, and I do not have a security license, but I have also sold partials. It depends on what I come away from the property with. I have sold partials where I've sold the first 3 years or 5 years or 6 years of a loan to an investor, right? So if I have $100,000 mortgage, I'll sell 50 at 9%. I'll sell to somebody $50,000 of that note at 8.5 or at 9, at my rate, at 9. And then I get to pick the loan back up after that. And there's a contract that says who does what, and it's the same kind of thing. If you want out, it's going to cost you something. If I want it back, it's going to cost me something. If it goes into default, that's where, if I guarantee the payment, I've now created a security. So there are lots and lots of people out there offering to do that. I'll make the payments good. Well, once you've done that, now you've given somebody if you're doing it and you do it one time, it's okay. You're doing it in volume, you're going to be, many of these note seller bigger companies collapse. They don't intend to turn into a Ponzi scheme, but they started as an honest business, but they turn into a Ponzi scheme once people stop paying. the homeowner in the end of the world that we work in, the homeowner always looks like the property. If it's a bottom end property in a bad part of town, that's, it's just, this isn't a place that you think is where you want to be. It's the homeowner is going to be at the economic edge of their environment, and they're going to have trouble. They don't have $3,000 in the bank for a rainy day. They don't. They've got 100 maybe. So if they have a little thing like a pandemic, they don't work. Right. I gave everybody in my portfolio 2 months, and then we started to figure things out. I have one tenant that was $1,400 a month early, every month early, and she can't cover it now. So she's paying $900 a month. I'm underwater in that property by, $100, $200 a month. I mean, that's okay. That's okay. She's fine. It'll be all right. She's been a tenant for 5 years now. So, but if I was a bank, that wouldn't happen. Right?
When you make these loans to agents, are they secured on anything?
Yeah, they're secured against their commission.
Oh, interesting. But what happens if the seller bails and it doesn't close?
Is that going to happen today?
People get cold feet.
Does anything go 180 days?
Well, no, but there's a lot of people who are nervous about buying something else in this market.
Sure.
And
yeah, okay.
Yeah.
Okay.
Okay. Well, it hasn't happened at any rate, and you've
Right.
done a bunch of them. So
and you don't know this, but I used to own the town collection agency in Santa Rosa. And so I've collected from a lot of real estate agents. They're not hard to find. They advertise every Sunday.
Right. Yeah. Yeah, you know where to find them every Sunday, 1 to 4.
Yeah. So it's and yes, some go bankrupt and some go bad and all that kind of stuff. So again, I'm underwriting. Maybe this is the opposite of me saying it's most important. If I'm going to hold something, if I'm going to do a long-term project, it's all about the partner. If I'm lending to you, the broker, the agent, I'm looking through you to the property.
Right.
Right. And this house in Terra Linda it had no choice but to sell.
Yeah, I live in Sebastopol, so
yeah. And it was an agent with
Right.
30 years experience that I've known acquaintance of for 10.
Yeah.
And I said, Jim, is this going to sell? He said, oh, the minute it goes up.
Huh. So I could make some flyers. I feel like I'd need to know a whole lot more, but I don't know what I don't know. I don't know what to ask, like how would I start to do something like this?
Ain't that the truth?
Well,
yeah,
you need my
know,
license.
you don't know.
I need a license.
Yeah. Well,
to sell notes.
Yeah. Well, to originate. Yeah.
To originate.
Yeah.
Oh.
So there's a whole bunch of rules. I have a license. I give you a contract. We plug it all in, and
Interesting. So I need a loan origination license for even these, small loans to agents.
Yes,
Okay.
if you do not need a license in California to finance goods or services, but anything that constitutes a loan, and this is most states operate this way, anything that constitutes a loan falls under the California Financing Lenders Law. And years ago, the people that did this created a barrier so new people couldn't get in. Yeah, and
which is why you can do seller financing without that.
Because you're not lending money. You're exchanging goods. You're exchanging goods or services for a promise to pay. That's why you can sell a car on terms if you want without needing a license.
Okay.
until you sell 10.
Uh-huh.
So, and you can,
Interesting. Okay.
you can do 3 seller finance deals, real estate deals a year before you need an MLO. A mortgage.
Oh, you can do 3 per year.
Mhm. So
Okay.
you can do
Yeah.
3, your husband can do 3, your IRA can do 3. You can,
Oh,
you'll never hit the number where somebody's going to look, as long as you're not taking advantage of people.
mhm.
Yeah, I was going to ask if this was an RMLO kind of thing. That you're talking
The
about,
no,
the
no,
license.
the reason that the short-term notes are not is because they're construction loans.
Mhm.
And you know,
Kind of more on like doing the seller financing, say more long term. Like I know you can RMLO on those, but like if you were hiring the RMLO to do that, you don't necessarily need to be licensed yourself if you're putting the
No,
deal together, right?
That's right. That's right.
Yeah.
And but now you're down to state by state. Georgia, you need to be. Alabama, you do not. Pensacola, you do not. But I'm a licensed, I happen to be a licensed lender in Florida, so it's okay. What that does mean though is I'm held to a higher standard. I have to verify the ATR, the ability to repay rule. I can't knowingly lend money to somebody who cannot pay me back.
Yeah,
You
it's
would
the
think,
Dodd-Frank
why,
and all that.
right? You would think, why would anybody do that? Well, that business is called loan to own. And it typically is in the, well, it's in the low end house market, and it's certainly how the buy here, pay here car lots operate. So I buy a house for at auction for $50,000. I fix it up. I sell it to you for $100,000 at $1,000 a month. You collapse. I've collected that $1,000 a month like it's rent, and I should have a better property when I take it back, because you've been the homeowner, you're vested, and I got a down payment from you. So I have $100,000 sale. I'll get a $10,000 down payment, and then I'll give you a payment that you cannot afford, knowing that I'm going to be able to keep that 10 grand. So the district attorney phrase for that is loan to own scheme.
Hmm.
Hey,
Yeah, that's the
Steve.
whole Dodd-Frank thing. But yeah, go ahead.
Oh, no, sorry. Steve, I have a question for you, sort of going the other way for for seller financing. Might have a chance to buy 4 to 5 single families where I am using seller financing for an older couple who's looking to sort of liquidate some of their portfolio. Are you, I guess it's a little different for you because you're doing this yourself, but for me, would I make a stipulation of assuming they agree with the terms and they want to owner finance, do I make it a part of the deal that to use my people, to use an RMLO, to use a title company that I'm specifying, or whose hands is that in? Exactly?
In that instance, all of the exposure is on the seller. So the seller is selling to you these properties for an exchange. The exchange is for a promise to pay, deed of trust and a promissory note.
Yeah.
So he can do that because he owns them. He's got 5. If I'm the seller, I want 5 individual transactions.
Right. Yeah.
Or maybe you want 5 individual transactions in case house number 1 is no good and you want to keep house number 5 and you're going to do something, you know. But then you need, well, you didn't ask any questions about, you know, how to set up the note. Are you looking to just step into his shoes and hold these?
Well,
for next
I don't
generation?
know that this came up literally over the weekend. It's one of our friends, their parents are landlords who are looking to liquidate. So I haven't really approached seller financing from them, but it would seem like to me, because they're not looking to 1031. I don't know if they care about capital gains, but I would imagine they would. So I would think that seller finance would be an option for them, but I don't know if they really know the concept. And I mean, I'm not underwriting anything.
No,
You know what I
because
mean?
you're
That
the applicant.
because
so
I'm the
you're
buyer. But yeah.
Yeah.
So, but do I suggest if they're not familiar with the concept, am I suggesting the title company, their MLO, the
Yes,
attorney?
you should, yes,
Okay.
you should make them. You will find typically that title company contracts are really thin. So it doesn't offer, they don't have to be 56 pages, but there's probably a couple of pages of things to consider. Rights and rights of foreclosure and, those kinds of things. That if you bought, we'll say we bought 5 for 100,000 a piece, that's 500,000. So there's this blanket mortgage of 500,000. You should, for your own benefit, ascribe a value to each one of the assets, so that if you decide you want to sell number one, that that house you bought for 100,000, you want to be able to sell for 100,000, or you want to be able to sell it for market, or however you want to pay that back. Or that if you want to sell house number one, you're allowed to substitute in house number 6 to keep him to have sufficient equity. And as long as you're selling the worst property and buying a better property, me as the seller, I'm happy with that. That my my protection just got better.
Yeah.
Right?
Gotcha. Okay. Thanks. Steve.
We
I
started
Sorry.
nibbling around with a guy in Pensacola who had 25 pieces that he wanted to sell, and that kind of just evaporated. But there's lots of people my age that don't want to do this anymore.
Right.
Depending on their age, though, you do need to be careful of elder financial abuse laws.
Hey, Keith, I got a question for you.
Sure.
Are you planning, or have you thought about like wrapping to like a penalty box buyer on these? Is that part of your strategy?
I haven't even thought that far. The conversation happened on Saturday, so I'm still just trying to figure out the numbers first, and they haven't sent me the specifics. They gave me a general idea, but
I think your end game will definitely affect what your numbers and stuff you're looking for sure.
Yeah.
So like if you're looking for cash flow, if you just want to put yourself in the middle, but again, Steve's definitely the expert. I just have taken a course and haven't done anything myself yet. So I don't even know like wraps and the legality and all that kind of stuff. But that's something to consider potentially. I guess I'll pose the question to Steve. Your experience on wraps, difficulties?
It's a layer of complexity that really takes a couple of iterations on a yellow pad with a pencil to make sure that you're not getting yourself into a problem. You want to make sure that that your wrap is longer than the underlying. So my most experience in wraps is in cars, right? So I'm a small dollar guy. You've got a $20,000 Acura, or the last one was an Acura. A $20,000 Acura, you're behind on. You can't handle the $600 a month payment anymore. So I'll come in, cure your delinquency, and basically resell you your own car for $24,000. And you still got 2 years to run on the underlying car note. I'll add another year for you to pay me back. So for 2 years, I'm just servicing a car note. If you owed $600 a month, you're paying me $500, and I'm adding $100 and making your car payment, right? So I'm out of pocket $100 every month. But knowing when I get to the 3rd year after the car note's paid off, I have a whole nother year of $500 a month payments that are all mine. I've got the car. But that's typically what we do. So you do the same thing in a house structure. You buy a house, somebody's selling a house that has a first mortgage on it. And here, so I've got a house in Roanoke Park. Bev knows where Roanoke Park is. So I have a house in Roanoke Park that has a 3.5% first mortgage on it. When I bought the house, I thought that was insane. That was crazy. So I have a note over it for, the house had a $500,000 had a $500,000 note. I sold it with a $600,000 note on top of that. And I'm getting payments on a $600,000 note. I'm getting $3,000 a month payments, and then I'm servicing a $2,000 a month loan. Right? So
It makes sense to me. I don't know if it makes sense to others, but I've seen a lot of diagrams for these.
So what could go wrong? House price goes down. Tenant / new owner stops paying. The bank miraculously decides to change their policy and call that note due. The time that they would call that note due is if mortgage rates jump to 9%. Say, my first mortgage was 13%. I was really proud when I rewrote it at 9. So 9% to me was a good note, right? So if the bank is sitting on a 3.5% mortgage and the market for that mortgage is now 5, they may go looking through their records to find notes that like, hey, we're getting payments from somebody else. So the payor for that note is the street address trust. So the note holder for that property is the street address, is the payor for the loan that was originally for an individual. The payor for that has now been transferred to, the property was transferred to a trust. I bought the property and the trust name, and I opened a bank account and make the payments that way. So.
Gotcha. Hey, Keith, what kind of, I don't know, city population, like, are these properties in? Like, just kind of curious, what kind of income?
Yeah, it's like a
bracket
B,
you're-
sort of a high C neighborhood. I'm in Delaware, and it's all local and around the area. So Steve was sort of right on his numbers. I think the units they have, they want between 100 and 115 per. So it's sort of that. But the tenants have been there for like 20 years in some cases, paying fairly market rents. There's one property that's a Section 8 property and the others are not. But it's steady. It's been steady for them. I just haven't analyzed it yet because I'm waiting on some figures from them.
So you're
But it's
currently
a cash flow play for me. There's not really appreciation to speak of.
yeah, so you're currently thinking of just taking it on and becoming the landlord currently, but not necessarily doing any kind of paper move with it after you acquired it.
Yeah, I don't think so. At least not initial plan. I mean, I'm not a hands-on landlord really. I'll have property management. I just want to make sure all the numbers are working before I get into it too
Okay.
deep.
Yeah, gotcha.
So this is a good point to jump here, and what Keith's working on is control of the property is where the money is. Everything else is an expense, right? So it's paying a mortgage, it's paying the seller, it's the cost of collection, it's the repair, maintenance, and upkeep, taxes and insurance. All those things just chip away at. I have control of this property, and there's many different ways to control. I held an option I held an option that I let expire, and I lost money on one. That's one. But I held an option for a piece of property for 5 years, and then eventually this is sold a number of years ago, but eventually the market came up that it made sense to execute the option and then sell the real estate. And so I have a.
So Steve, how do I get into selling notes? It sounds like I need a license. So I'm gonna need some education to get that license, I imagine.
where do you suggest, what are the steps you would suggest to somebody who wants to take their cash and make notes to people with it? Hard
Okay.
money lending.
Okay, and so it's through the here it's the California Department of Financial Protection and Innovation, which was the old California Department of Corporations. It requires an NMLS certification. And National Mortgage Loan Servicing, NMLS.
Okay.
Certification. It's 80 hours of class, passing a test. There's a full list on the dfpi.ca.dfpi.gov website that says all the steps are. It took me 9 months to get my license.
Okay. So I guess the other option is finding somebody that has the certification that can use my capital. Okay. Okay. So you said something about,
if you have people
when
that
I
need
said something about that before, you said something about not syndicating yet. And I'm like, I wonder if that, if I give you money and you loan it and you're the one licensed, then is there some different that you have to do in terms
so
of?
if you bring me
license?
the borrower and the capital and you run it in one ear and out the other, and Steve takes a little piece of it, then
Okay.
and that's fine. Really esoteric. I have funded a number of transactions for tech workers and startups that didn't have enough money to execute their stock options, and they knew the company was taking off. And this guy out of New York found me through my attorney, and he would negotiate the transaction shares of how whatever they were doing, right? So because some of those are restricted shares, they can't sell them right away, so they would take a lien against them and do all this weird, the paperwork was way beyond me. But I would send $100,000 to John the programmer, who would then sign the sale agreement to sell the interest in these shares to Ed, the Wall Street banker guy. And then I would send the 100 and I would get 110 in. And I would do,
Wow.
for me, these are gigantic. I'm doing 100, 200, $300,000 transactions. And it's like, wow, I'm like in with the coolest people in the room. And I'm using my license to do this exchange. And I had to understand who all this, so make sure I wasn't laundering money or anything. I had to understand where they were. And the guy worked at Twitter. The guy worked at Twitter. And that going to go down? Probably not. Yeah. So that's that kind of transaction. Yeah.
Interesting.
Yeah. So I've been funding staging loans. I've been funding small fix and flips. I work under the normal real estate world. They've got that figured out. There's people that have that completely figured out. I do not. I let them do that. I don't sell my accounts to FHA. My accounts sit in my computer system and in my bank account.
Am I allowed to advertise if I am not the one making the loan? And if I'm running it through, like, for instance, could I go tomorrow and put flyers out in agent boxes here?
You can say you found this incredible source called Executive Loan Center, license number 604855, who funds weird transactions, short-term weird transactions up to a year.
Okay.
Typically, I want to get my house ready to sell. I've paid hotel expenses. I've paid first and last for apartments for people moving out. It's, as long as there is some construction element, but in the loans to realtors, what am I going to want to know? What's your listing agreement? I have to tell your employer that she has given us a pledge against her commissions in the amount, or his commissions in the amount of, if it's $10,000, in the amount of $10,100. Right?
So you're actually making the loan to the real estate agent, but the agent is making the loan to the buyer, to
Oh,
the
no.
seller.
I do two things. I do this loan to the
Oh, okay.
agent thing over here. And Jens hit it exactly right.
Okay,
It's
so
like a payday loan.
that's the commission fronting. That's
That's
like
that's a whole nother thing. But the loan,
Okay.
so the agent says, if you spent $50,000, your house would get all cleaned up. Well, I don't want to spend
Yeah.
that. Well, would you spend $5,000?
Mhm.
Well, yeah. And then the 50 comes out of the upside of the profit. That's the pitch. Okay, well, I don't have the $50,000. Okay, but what if it was 55 at the closing table? Would you spend 55
Mhm.
to get 150?
Right.
And they go,
Okay.
yes. And you go do that. And then they go, oh my gosh, that's an annualized rate of 18%. Well, but it's really not. It's a fixed flat 9% charge that I put on the loan. And the reason I chose 8.99 was nobody was doing anything like that.
Yeah.
And the market's so hot today that it's fine. I'm making, like I said, I made 8.99 in 77 days.
So the loan is to the seller.
Mhm.
The agreement's to the seller. Then what is it secured on?
There's a letter that they sign in the loan agreement that goes to the title company. I like them to select Old Republic Title. Right?
Mhm.
They know me. I feel comfortable there. If you'll open your escrow with Old Republic Title and let them accept this letter, just like they would accept the mechanics lien or the real estate commission payout, all that stuff, and then I get paid out of the escrow. I don't file a second. I don't file a second unless two things: the listing agreement expires. I'm sorry, no, two things. If it's more than 6 months and you still haven't sold, then you have to come back and we have to talk about it, or you fire your realtor.
Oh,
So
okay.
I'm protecting the realtor.
So the realtor likes that.
Uh-huh.
Great. So what is your recourse? If, let's say the seller, freaks
When
out, maybe his mom
So-
dies and he says, I can't deal with this now.
Right.
I'm not going to sell my house.
So I will take a voluntary second position mortgage and monthly payments.
Okay, so then then it's written in the contract that it would convert to a second on the
I
house.
tell them you have that option. My recourse is I can go sue you and get a second.
Oh, okay.
But
Okay.
I'm not going to do that. One, the real estate agent, I want more business from the real estate agent. What I'm going to do is I'm going to do what I do with every day with all my borrowers is, what can you do? What can we do? Let's figure out how to make lemonade out of this lemon. And I have not had it happen in this business cycle, but in prior business cycles, I write down I do a loan mod. That's all it is. You do a loan modification. Say, here's a new deal.
Right. Okay.
And I don't jack people up on interest. I don't, it's like, okay, that's part of the cost of doing business. I used to be the town bill collector. Nobody liked me. People like me now.
Right.
So
So I'm picturing on one flyer to agents that I've got that on half the flyer, and the other half of the flyer is, hard money loans.
Mhm.
Do you have somebody who is, wants to buy a house, but they can't get a first for some reason, and then I could make a first on a house for them.
Mhm.
So either of those situations, if they say, hey, I got somebody, then I can say, perfect. And I go to you and I say, hey, I found somebody interested in doing this deal. I've got the cash. Here's the borrower. Can you make it happen? And then you could make either of those kind of things happen.
Yeah.
Okay. And then what kind of thing do you charge? Do you charge a percentage of the transaction, or does it?
I've done 70-30 splits.
70-30 splits.
Mhm.
Okay.
And you're the
All
70.
right,
You're the 70. I'm the 30.
right. Thanks for that clarification. Yeah. Okay, good. All right. Well, we keep saying, oh, well, maybe we should get into notes, and I didn't know how. So I knew this was the place to go to find out. Thank you, Steve.
Steve, one more question.
Yeah.
This is Jens again. Hey, are you using any kind of software to track, like, your investments on your notes, like what's payable over time? I mean, other than just spreadsheets.
We run a full loan management company, so we've got big, army software. We use QuickBooks for the off the regular. We had been using QuickBooks and just managing a dozen transactions there. We then have decided that we've put them into a category inside of our loan management system, where there's 5,000 accounts there over the last 5 years. We process 400 applications a month and write 150 loans a month.
All right. Yeah, I was just curious if there was something kind of
Yeah.
available for us small time people to
I
track
hear
our stuff.
I hear people like Notesmith. And there's a company called Revival Brothers who've written some software. I think the right place to go, I think I'd send you back to Dave Putz at JKP out in New Jersey. He's been around a long time. I thought at one point I was just going to be a friendly competitor of his, but we got back into the unsecured world. I like Dave. I like Dave. And he's got a lot of stuff that he gives away, and then of course things he charges for. Yeah, and he wants you to buy loans from him.
Gotcha. Right, cool. I'm gonna look into some of that.
All right. What else we have? I want to go eat dinner.
You sent out an email saying something about passive versus active, the pros and cons of each. I came in late. You probably covered that whole thing at the beginning, or did you?
Yeah. It was just a quick
Okay.
5 minutes. This will be up on YouTube in a couple of days, and you can
Okay.
go back and look
I'll
at that.
check
And
it out.
what I did is, I try to like tell on myself in these calls, and I had been an adamant active investor. Nobody could do this smarter than me. Nobody was smarter than me. Nobody could do this better. And so I have my little list of things. And what I've found is that there's some stuff I'm better at, but there's other things, like I've got this company that I put money with up in where are they? They're in Washington, and they're so much better than I am. They're an apartment REIT.
Oh, okay. Oh, an apartment REIT.
Yeah.
Huh.
And so I parked. I'm a high-strung 65-year-old, and if I fell over, what would happen? It would take the kids like forever to figure out where the money is. So I had to organize that some. So there's some money with those people. There's money in the company. There's there's things that are like out of my control. So I've been a solo I've been a business owner since 1989, and I took 2 years ago, maybe it's three now, my first ever partner. Right, my first ever partner. I've had partners in deals, whatever. It's the first guy that can put up with me, and he's young. He's 32, and he is smarter than me. So much so that we had some money in funding our programs from my old country club buddies, and they decided they wanted a key man life insurance policy. And I was complaining about how expensive that was going to be. And because I'm a cancer survivor, I'm 65, blah, 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 right? And they said, oh, no, not on you, on Nick.
Yeah.
Right? So I've now gotten to the point that my partner is more important in the day-to-day operation of the business than I am. So,
Yeah.
yay. You know, so, yeah.
Perfect.
Yeah. So
This is the right stage of life. I'm in my
Yeah.
early 60s too.
Yeah,
And this
yeah,
is what we're supposed to do.
yeah,
We take the
yeah,
youngsters, we train them.
yeah. So that's what I'm doing. I tell stories about in
Awesome.
1980 when we invented credit scoring. So
Well, my husband actually worked for Fair Isaac.
okay. So he and I,
Way
well,
back in the day.
I had a job. Sorry, Jens, you got to hear this. Sorry, John. Sorry, Campbell. Sorry, Eric. I was a frontline credit manager. I was the new account supervisor at a fairly large bank, and it was at the creation of FICO. And my job was to be the champion against FICO, the challenger. And my job was to do a better job than the machine. Right? 90% of the transactions, everybody, the approvals and denials, everybody agreed. It was the 10% that FICO said yes and my team said no, and vice versa. And it was those margins that we did all the work on. 40 years later, here I am building an AI machine, all dependent on scoring and regression analysis, and we're processing 500 applications a month through it. And I continue to tell stories about, well, when we did this back in, so.
Right. Yeah. Yeah.
We're tied in with the development team. We meet every Wednesday, and I just nudge the ship along, but yeah,
When I first started real estate, a lot of people didn't have computers, and we'd get a book every week with all the listings in it. It was like a phone book about this thick every week. I loved the book. I missed the book.
Yeah.
Okay, we're boring all the young people now.
All right. So there we
Let
are.
you go eat.
All right. I appreciate everybody being in. Email me back if there's something else you want us to talk about. I've got 2 years of these posted, and I've run out of stuff to talk about. What I will have next month is the results of bidding on auctions in Pensacola. And I may own some tax deed property come a week from now. So we'll find out what happens at 7:00 next Monday morning when I start hitting the entry key and bid. So.
Wow, cool.
All right.
Well, good luck to you, Steve.
Right.
Signing off.
All right.
Thank you for everything.
Okay. All
Bye.
right. Jens, thanks for jumping in as much as you did. I appreciate it. You carried the day.
Thank you for your time. Thank you for your time and your knowledge. Appreciate it.
Okay. All right. And any questions, always, just send them over. All right. Take care.
Bye.
All right. Bye all.